Good afternoon. My name is Elliot Kallen, and I want to welcome you to this second edition of Meet the Expert. We are excited here at Prosperity Financial Group. We've got a lot of people on the line, more people coming on. We are planning to do this, Meet the Expert, with all types of topics, not just financial, but medical, fitness, lifestyle, and of course, always about money, because if it's money, it's personal. That's our tagline. So we've got three speakers for today. In order, it's going to be Campbell Judge and Joe Almon, and then Dr. Bill Lloyd. And let me tell you what we're covering. And if you need to reach it, I believe at the bottom of your screen, there's a shape of a hand. And if you want to put questions on there, go ahead and write your question out. And we will get to it if we can. The whole program here should take a little less than an hour. So grab yourself a cup of coffee, hit the bathroom, and we should have an exciting event. So Campbell and Joe are from Fidelity Investments. Dr. Bill is with Transamerica. I'll read you his introduction, and he's going to talk about how do you stay healthy in this, when the world is opening up in a different way. We're going to travel, we're going to go to restaurants. Bill is going to talk about how to be healthy, what's going on, and where we're going. So he's eminently qualified physician. Campbell and Joe are from Fidelity Investments. You all know Fidelity. It's the 800-pound gorilla. We see them on TV all the time in the financial business. They have that green mile walking towards retirement. And Campbell, I know Campbell is a personal friend of mine. He's been with Fidelity a very long time, been calling on me. And he's been in what's called the wholesale business, which are the people that call on guys like me who are money managers. And we manage a little bit more than $300 million here in San Ramon, California. If you do need to reach us, our website is www.prosperitych, Frank G like George, prosperityfg.com, and I'm at Elliot at prosperityfg.com. You can send me a question. You can pop me a line. We've got lots of people who work here that are very, very well qualified that can handle all your questions. So Campbell, I'd like for you to talk a little bit about Fidelity's perspective of where we're going on how we're going to make money, particularly in the health industry, the science industry. We've got a lot of clients who have said, you know, Elliot, I don't want to panic. This is an opportunity. This is the fourth time since I've been in a business that we've had a major pullback. I imagine it won't be my last, but when you get a 20, 25% pullback, and I've been there when they're 40 and 50% pullbacks in both bonds and stocks, there means there's opportunity. We come out of this, we look good. The world somehow continues to spin and people make money. And I'm always reminded, Campbell, that during the Great Depression, when there were food lines everywhere and soup lines everywhere, and the Dust Bowl in the Middle East, excuse me, in the Midwest of the United States, I'm reminded that the major millionaires of their time, the Rockefellers, the Carnegies, were buying up urban stretches of real estate in New York and Chicago and Pittsburgh. And when we all came out of this, they made a lot of money owning prime real estate. But while they were in it, they were ridiculed from some of the most famous people in America for not knowing that we're in a 100-year drought of real estate. So money and opportunity always seem to work together. So Campbell, from Fidelity, and then I'm going to give you over to Joe, and Joe will come back to me. And Bill, if you're okay, I'm going to read your bio, a little bit about it, and then turn it over to you, and you'll bring it back to me. So Campbell, you want to take it away?
Okay, great. Thank you so much, Elliot. And it's really nice to be part of this meeting. Doing it virtually is the new world in which all of us are operating. And so whether we're doing Zoom meetings with our friends and family or our business associates, this is becoming much more normal. So thank you for putting this together. Elliot is an institutional client of Fidelity's. And so as an institutional client of Fidelity's, we're able to give him access to some of our best, smartest, most dialed in professionals. And so in just a few minutes, I'm going to introduce Joe Almon. But I want to make a couple comments just about what we're experiencing now. And there's a lot of uncharted territory. And so all of those cliches that exist in the business are very accurate right now. And Elliot was talking about those investors back in the dark times of the Great Depression who came out much stronger. There's a Peter Lynch quote that I love, and that is, it's tough to bet on the end of the world because it doesn't happen very often, which is only a month or so ago, March 23rd, when we hit that bottom of the market, it felt very dark. There were so many unknowns out there. And so in no particular order, we don't know what the COVID-19 crisis and how long it's going to last. So are we flattening the curve is one question. When is the economy going to open up is another question. Will there be a vaccination? So these are the things that we don't know, and only time will tell, and time will determine the length and longevity of those uncertainties. What we do know, though, is the government and Congress has acted very strongly. They passed the CARES Act, which created a stimulus. Maybe it was a stabilization, maybe it was a stimulus of close to $2.2 trillion that is now those checks are getting into the hands of the people that need it. And there's likely more to come if necessary. So the government is behind this, the stabilization and stimulus. Interest rates were cut to close to zero. And fortunately, the economy was on solid footing before we got to this point. The consumer has been in good shape leading up to this. And that consumer is now going to benefit from low oil prices and low interest rates. The gradual reopening of the economy should prove to be a good addition to that stimulus. And what the market has gone through just in the last 6-8 weeks has been extraordinary. Since the lows of March 23rd that I mentioned, since the lows, the market has rebounded close to 28%. So it was one of the fastest drops, and now this has been one of the fastest recoveries that we've experienced. Going forward, the question of how long will this recovery take place to fully be realized is the question mark that's out there. But this type of uncertainty in the market creates the opportunity for all of us as investors. Perhaps it's going to be an endurance test for us. Perhaps it's going to be one where, because of the news cycle, we'll be tested and we'll be questioning those decisions that we've made. But with good, solid planning, with good and proper portfolio construction that Elliot does such a great job of, this is how we can get through this. So as part of my job is to bring some of the best ideas and insights to Elliot to then help him sort of understand Fidelity's opinion on what's going on. One of these ideas that we've been talking to Elliot about that he's on board with is the importance and significance of healthcare. So healthcare for all of us from our quality of life, but also from an investment standpoint. And so I'm fortunate to be able to bring one of our specialists, and Joe Almon, who's been in the investment business since 1986, bringing a tremendous amount of depth and resources and expertise into the investment discussion around healthcare. So let me turn it over to Joe to go through a little bit of an update on what's happening and where the opportunities are, and then we'll turn it back over to Elliot. So thank you, Joe, for being with us.
You're welcome. Thanks, Campbell. It's great to be here, everybody. Good afternoon. The opportunity, I'll kind of begin with the end in mind, so to speak. The opportunity for us as investors in the healthcare sector right now, we think is a rare one. It's a unique one. It's because essentially sort of all of the stars have aligned from an investment standpoint. When we think about sectors, and there are 11 sectors of the economy, my job is to bring Fidelity's best sector thinking out into the field, to join Campbell, to call on folks like Elliot, and bring our best sector thinking to folks like Elliot. But when we think about sectors, basically from an investment standpoint, there's 4 areas that we're thinking about. We're thinking about the fundamentals of the sector. What is the supply and demand picture? Then we're going to look at the technical picture, the technical analysis. How do the charts look? Every portfolio manager at Fidelity is looking at the charts when they're thinking about making an investment. Okay, so we go fundamentals, then we go technical, then we say, hey, what about valuations? Above average, below average, what do they look like? And then we go, hey, what about the manager's track record? Okay, because the healthcare sector is absolutely an area where I would not go passive. I would use an active manager. If you're going to use an active manager, hey, what does this person's track record look like? What does the team around them look like? So those are the 4 areas that we think about, and I'm going to touch on those briefly. From a supply and demand standpoint, of the 11 sectors of our economy, I see no more inevitable growth tailwind than exists in the healthcare sector. And it's simply because we spend significantly more money on healthcare goods and services as we age. And we are aging not only in this country, but globally. Okay? So the supply and demand picture is, it really is inevitable. It is just something that you can count on for the rest of our lifetimes and beyond, frankly. The human body wears out. What can you say, right? So check, the fundamentals of the healthcare sector, check. The technical picture. If I could show you the technical picture, the way markets tend to work is you get a lot of this, right? Up and down, up and down, up and down. But for long periods of time, it'll end where it started. I can show you these long-term pictures. We call these, secular bull markets. And the way it works is you get this, from a technical picture, you get this basing pattern like this. Even though the market will do this, right? Ultimately, 5 years later, it ends up where it started. And then all of a sudden, it'll break what's called breakout. It'll break above this channel, this long channel. And for then a secular period of time, it's off to the races. That's exactly what you see in healthcare today. We have broken out significantly, substantially from a 5-year plus base. And it looks exactly like how markets work. So check. Technical picture looks outstanding. Valuations. Valuations in healthcare right now are still slightly below their long-term average. They are changing as we speak. Okay, our healthcare fund through yesterday is beating the S&P 500 by 1,255 basis points, right? That's 12.55 percentage points. So the picture's changing right before our very eyes, like I say, but we're still below average relative to history going back 40 plus years. It's pretty unique, right? The healthcare sector, so far, we're in the middle of earnings season. So far, the healthcare sector is reporting the largest aggregate difference between actual earnings and estimated or predicted earnings. That difference is positive, obviously. Right? The year over year, in Q1 of this year over year, healthcare had the second largest increase in revenues of any of the 11 sectors. For Q2, which we're in right now, obviously, healthcare is expected to grow its revenues by the largest amount of any of the 11 sectors. Right? This is just the fundamental picture playing out before our very eyes. And for it to be still below average in terms of valuations, fantastic opportunity. So valuations, check. Last but not least, the manager. Eddie Yoon has been managing our healthcare fund for 11 and a half years. It was 11 and a half years at the end of March. Has a world-class team behind him. He's had the same team behind him for the last 10 plus years. Ever since Fidelity went to the structure where you don't have to graduate from being an analyst to being a portfolio manager. You can just be a professional analyst. Ever since we went to that system, Eddie's team has stayed together and their cohesiveness is second to none. He has that team firing on all cylinders and has had, frankly, for years now. World-class team behind a manager whose track record speaks for itself. Over the 11 and a half years that he's run this fund, he has beaten his benchmark by about 3% per year. And he's beaten the S&P 500 by about 6% per year. This is through the end of March. Outstanding, outstanding numbers. Check, right? So that's what I mean when I say all the stars have aligned. You've got the fundamentals, you've got supply and demand, you've got the technical picture, you've got valuations, and you've got a phenomenal manager with a phenomenal team behind him. So this happens rarely, like I say, to start with. This is a rare opportunity. Typically, you try to get 2 or maybe 3 of those aligned in your favor. To have all 4, unique opportunity. Even for those who have healthcare in the portfolio currently, we think healthcare should just literally be a permanent structural overweight in the portfolio. Now, keep your eyes on valuations, right? There's always a caveat. If the market becomes too optimistic about something, then that will be a headwind to future returns. That is not the case right now with healthcare, obviously. And just keep in touch with Elliot. He'll keep in touch with Campbell, who will keep in touch with me. We'll keep you abreast of where valuations stand. But as long as valuations remain reasonable, like I say, we think healthcare is literally should be a permanent structural overweight. Even if you own it right now, the opportunity is fantastic. It's still there. These valuations, these below average valuations, will not stay here. Okay, you mark my words, they will not stay here. The period that we have lived in healthcare for the last, I guess call it 28 years now, basically ever since Hillary Care, has been marked by healthcare having political cycles, not business cycles. Obviously, healthcare is very resistant to recessions. So it is not susceptible to the business cycle the way the cyclical sectors are, financial services or real estate or the material sector, right? We know it's recession resistant, but ever since Hillary Care in '92, we've lived through a period where we have these political cycles. Every 4 years, the politicians would come along and more or less just bash the healthcare sector to drum up votes. Most of it is targeted at the pharmaceutical sub-industry, the largest sub-industry of healthcare. But nevertheless, that's the period we've lived in for, like I say, 28 years. We think COVID-19, as terrible as this is, there's a silver lining for the healthcare sector, and especially for the biotechnology sub-industry within healthcare. And that silver lining is the world now recognizes, I think we as investors recognize, I think the federal government recognizes it, I think we all now recognize that without a healthy population, we cannot have a healthy economy. I think what's going to happen going forward is the bashing on the healthcare sector every 4 years will stop. Is going to stop because the biotech sector in particular from COVID-19. Dr. Lloyd will touch on this, I assume, but my portfolio managers tell me that we do not put coronavirus behind us until we get to this concept of herd immunity. And that herd immunity is 60 to 70% of the world's population needs to either have survived the disease or be vaccinated when a vaccine comes along, obviously. That, like I say, literally means biotech has to save the world from COVID-19. We believe that will happen. We don't expect a vaccine until the early part of next year, and that'll be for the frontline workers initially, and then the rest of us we expect we'll get it the second half of next year, but we do expect a vaccine. But the point is, the healthcare sector is being seen in a whole new light relative to what it's been for the last 28 years. And it is a justifiably better light, right? It's being elevated to a more rightful place in investors' minds, in politicians' minds. And I think that is very, very significant going forward. Combine all that with the four areas I've already touched on. That's, again, what makes, in our opinion, healthcare a very unique, very rare investment opportunity currently.
So, Joe, before you go, let me ask you a question here. And that is, give us 2 or 3 of the winners as we come out of we are in this virus and we come out. What companies are best poised to make money and make money for shareholders?
Yes, great question, Elliot. So it's interesting because you may have noticed Gilead last week had some positive stock reaction to their it's called remdesivir drug. I don't know who was buying. You don't know for sure, but in terms of COVID-19, we think whoever develops the vaccine will sell it at cost. Okay, so point is, I don't know who was buying Gilead last week on the positive, and then of course later it was negative news, but we think they're going to sell it at cost. We think it is not a profit generator for whoever develops a vaccine. So in other words, we're not changing our process in the biotech fund or the healthcare fund based on COVID-19 per se. Now, having said that, we're buying a couple of small-ish testing companies. I can't tell you what they are just yet. Maybe early next month, I'll be able to let you know. we're buying a couple of small testing companies that we think will profit from test stockpiling going forward indefinitely, but not necessarily specific to COVID-19. So long-winded way of saying, Elliot, the winners are the innovative biotech firms who are curing diseases, who are making cancer a manageable disease, the rare and genetic diseases, Duchenne's muscular dystrophy, cystic fibrosis, this type of thing. The winners are, I think, the names that we already know. So names like you might hear Regeneron, Vertex, Ascendis, Alexion, these type of names, these are still the winners. They were the winners before COVID. We think they'll be the winners after COVID as well.
All right, Joe, I want to thank you. I want to thank you, Campbell. And I also want to tell you that we've added to all of our portfolios, and at the core, we are portfolio managers. We've added the Fidelity Healthcare Sector Program, our products, to the portfolios moving forward. So we're, if this works out great, we're going to come back and put a nice crown on you. And if it doesn't work out, we're going to throw tomatoes at you.
I get it.
I'm also telling you that if you have questions, go ahead and email them to me at Elliot at Prosperity, ELLIOT at prosperityfg.com. And I'll get those out for you. And that we are recording this and we'll be putting this on our website the next day or so. So if you're missing this or you're in your car or you want to do it again, and we've got to edit it, take some wrinkles off my face, and we'll put them on the website for everybody. Okay. So let me introduce our second speaker now that I'm very excited about, because you've just been through the technical, fundamental side of money and a sector. Now, we're not going to do that right now. We're going to talk about life, because that's what Dr. Bill Lloyd works on. He has been with Transamerica in their advanced market as a top medical advisor for years and years to come. I've actually heard him speak live. I'm sure he doesn't remember me. I've got a face for radio, so Bill, I won't hold that against you. And he is a board-certified surgeon and pathologist. Been around a long time. He's considered a medical expert in the world of immunology, and particularly this coronavirus, COVID-19. So we're going to talk about what's going on, what don't you know that we all should know, and then moving forward, how are we going to stay healthy now? I'd like to start eating out. I'd like to go to the gym. I'd like to lose my freshman 15 that I gained since this whole thing started. How do we pack it on? But how do I stay healthy? I was just talking to someone that at the beginning of March, when this started, they were at 24-hour fitness, not to knock them, but they had run out of disinfectant there in March. So, gyms themselves are not the cleanest things in the world. So Dr. Bill, would you mind coming on and enlightening all of us of where we are and then where we're going?
Hello, Elliot, and good afternoon, everybody. I hope you can hear me clearly. Bill Lloyd here. I'm calling in from North Texas, where it's a nice sunny 90 degrees here today. And at Transamerica, as you heard, I serve as health director, and I work with what we call the Wealth and Health Initiative. And this is an educational program that preaches, plan today, live better tomorrow. Make smarter choices today about your finances, about your lifestyle choices, positive lifestyle choices, and about your health habits in that freshman 15. And then down the road, you can expect to have a more financially secure, a healthier, and a more dignified retirement. I always like to begin with a numerical update of the data about COVID-19. We can't talk about the future if we don't understand the present. So right now, today, there are approximately 3 million confirmed cases of COVID-19 worldwide and about 215,000 deaths around the world. Here in the United States, it's approximately 1 million confirmed cases. Now, these are individuals who were sick, who were tested, and the test came back positive. And that's all I'm saying. About 1 million, a third of them out of New York City. And there have been about 60,000 deaths. Here's what we've learned over the past 3 months. As it relates to COVID-19 versus other coronaviruses like the common cold, like seasonal influenza, like Ebola, like rabies, they're all coronaviruses. This COVID-19 is less lethal, but more contagious. Let me say this again, less lethal, but more contagious. We've learned that there's 3 categories of infection. The vast majority of people who have been infected by COVID-19 don't have a single symptom. They never coughed once, the vast majority. And then there's another nearly equally large group, all right, that had COVID-19 mild illness. So they had a bad cold. They had what felt like a bad case of the flu, coughing, congestion, muscle aches, fever, 7 to 14 days. They're all better back into their life. And then perhaps 18 to 20% of those with mild to moderate COVID develop the severe disease. And they're the ones, of course, we hear about in the news. And we're not trying to trivialize or marginalize the suffering of those families. But the reality, the harsh reality, is that it represents a very small percentage of all COVID-19 cases. Now, how do we know this? We know this because we finally have the tests to identify if someone has or has not been infected in the past. There's a lot of interesting studies coming out from centers around the world, especially in Iceland. Great data out of Germany, and that's one of the reasons why the Germans relaxed their stay-at-home rules. And from Stanford, California, in early April, they did a study involving 3,000 volunteers in Santa Clara County. That's where San Jose is, the first city in this country that documented community spread COVID-19. That means these are not people that went to China. These were not people that were working in a hospital or people who are living with people known to have COVID-19. No, these were healthy people living in San Jose. And they still got the disease, community spread. Well, they took 3,000 volunteers and they gave them the antibody test to see if their body had proteins, immunoglobulins to COVID-19. You know what they found out? When they adjusted for gender, age, ethnicity, economic strata, they found out in Santa Clara County, there was a 50 to 85-fold increase in the number of positive, healthy individuals with COVID-19 compared to the reported number of cases. That's 50 to 85-fold more. If we were to extrapolate that to the United States, where we said earlier, there's about 1 million confirmed cases, that would mean 50 million Americans have already had the disease. They've already been infected. They never sneezed once, but most of them have immunity from it now. Most of them have immunity from it now. So this should not alarm anybody. This is actually very good news. In an average winter, 45 to 60 million Americans get the flu. So we're in the same ballpark, and oh, that's right, it's another coronavirus. How come so many people got infected, but they never got sick? The doctors think the answer is something called cross-reactivity, and this could be something to keep you healthy now that the epidemic is coming to an end as far as the spike in overall cases. Cross-reactivity. I mentioned the common cold is a coronavirus. And it seems that many people who had a cold, let's say last October, last November, they got over it. They developed antibodies to it. Oh, guess what? When their body became exposed to COVID-19, those antibodies recognized COVID-19 because they were so genetically similar, both coronaviruses and have many similarities, that their healthy body's immune system attacked the COVID-19, so they never got sick. But they went ahead and made even more antibodies to the new invader. And so when they're tested, bingo, they tested positive for antibodies, but they never test positive for the virus because it's gone. Because their body that had a cold previously used that same healthy immune response to go after COVID-19. So cross-reactivity. Remember, the single greatest risk factor for getting COVID-19 illness is exposure to the virus. If you're not exposed, you're not going to get it. That's the whole idea behind stay at home. And if you go out, wear a mask, wear a face mask, wear a disposable surgical mask, wear a scarf, wear a pashmina, whatever you can get your hands on. It's not for you. It's to protect everybody else from you. Because guess what? You possibly may have already had COVID-19, never knew it, never got sick. And yet you could still be shedding that virus to other people. That's why they want you to wear the mask. So I brought up the topic of testing, and there's always questions about that. Remember, there's two basic categories. The diagnostic testing, this is the one we've been screaming about for the past 3 months. Why don't we have more tests? Diagnostic tests actually look for the virus inside a person's cells. Not really the whole virus, just little strips of unique genetic material for that COVID-19 virus. And if they're there, the laboratories sample those cells from your nose and your throat, and they amplify that genetic material so a device can identify the presence of that viral material, that unique viral material. So the diagnostic test simply says, do you or do you not have the virus in you? Now, over the past 10 days or so, we're talking more and more about recovery testing. It's not looking for the virus. It's an immunity passport. It's a simple rapid test, and all they want to know is, do you have antibodies to COVID-19? Doesn't say anything about whether you got sick or didn't get sick. Do you have the antibodies? Because if you have the antibodies, then you will not get sick again if that strain of COVID-19 comes around again. We'll touch on that in just a moment. So if you can get your hands on that recovery test, and it's available, you may have to pay out of pocket. Imagine the enormous sense of relief you and your family will have knowing that I never got it, or I had it, and I didn't get sick, and now I'm immune. As far as I'm concerned, it's a win-win proposition. Right? There are tests available, these rapid tests, and some of the national chain drugstores are starting to offer them as well. You get your answer in 15 to 20 minutes. More and more people are worried about resurgence of COVID-19. You got infected, you got sick, you got better, you tested negative, you got sick again. How could that happen? It seems that some people don't effectively or efficiently clear the virus when they get better the first time, and that the bug can hide in other parts of the body. Yeah, but you said you got tested and it was negative. Yeah, well, you got tested in your nose and your throat, and there may not have been sufficient virus there. But maybe the virus was hiding out in the lymph node or in the bloodstream or someplace else. So it is possible to have resurgence. Another good reason, no matter how well you feel, is to put that mask on. Even if you know you had COVID-19, proven COVID-19, and now you're feeling great, let's go shopping. And you go down the street, put the mask on, because you could be at risk of giving it to somebody else. Now that's very different than the second wave. And if you want to talk about staying healthy while the economy opens up, you need to be aware of that second wave. A lot of people don't know this about the Spanish flu pandemic of 1918-1919. They called it 1918-1990 because it had 3 waves. It's not because it started in December and carried over to the new year. Oh no, no, that pandemic came around 3 times. There were 3 waves. In fact, more Americans got sick and died in the second wave than the first time. That's what's really given us the jitters. What if it comes back in a second wave? Well, the risk is if it comes back in a second wave and there's a mutation, then your body will not recognize it. Mutation. Maybe you watch too many science fiction movies. A mutation in a coronavirus is a very simple thing, and it doesn't take place in the core element of the virus. It takes place, frankly, out in the far identification zone, out where the license plate is. Yeah, that's it. The license plate changes. And when the virus travels around the world and comes around again, your immune system is expecting one license plate, but the mutation changed it, so your body doesn't recognize it. That's the fear of the second wave, and that's why we want the vaccine, so that your body won't be fooled. It's the exact same reason why we get a new flu shot every year, because influenza A and influenza B, they mutate every time they go around the world because they're coronaviruses, and coronaviruses mutate frequently in the license plate, About the vaccines, you heard the earlier comments. Yes, most reasonable people are saying 18 months before we have a vaccine. We'd love to be able to give everybody a vaccine as a Christmas present. It does not seem likely. It does not seem likely. But again, we get smart about social distancing, hope that there's no mutation if there is a second wave. No guarantee, no guarantee. And then hopefully by early next year, we'll be lining up to get that vaccine. So brilliant scientists will find out what kind of vaccine we need. It could involve live virus particles, attenuated virus particles, or antibodies to virus particles. Okay, great. Nobel Prize, you've invented the vaccine. How are we going to make 350 million doses? Oh, how are we going to make 4 billion doses for the world? Not really a problem. The leading manufacturers of vaccine in the world, not just in this country, are already ramping up. Sanofi Pasteur, in an average year, produces 1 billion doses of vaccine. So does GlaxoSmithKline. So does Johnson & Johnson. So they have the apparatus and the wherewithal and the bandwidth to generate a very effective vaccine. And it may not be a shot. You might remember sugar pills or sugar cubes as a child for the polio vaccine, and they gave you a sugar cube with a drop of red fluid on it. Some are looking at a medicated Band-Aid, other systems to deliver an effective vaccine. It doesn't have to be a shot. We'll find out. As far as the most promising treatment that's out there right now, it's Mother Nature. It's a product that we call convalescent plasma. Healthy people who got COVID-19 that fully recovered and tested negative afterwards can donate a pint of blood. They take all the cells out of the blood and leave behind a yellow clear fluid that we call plasma. That plasma is medicine because it's chock full of, that's right, immunoglobulins and antibodies that will fight COVID-19. They give some of that plasma to somebody who is suffering and they get better and they get off the ventilator, or they never need to go on the ventilator. And by the way, if any of you have already had COVID-19, are in good shape, healthy, and tested negative afterwards, talk to your doctor, see if you could be a blood donor. You might be able to save upwards of 15 people's lives with just 1 pint of blood. I hope you think about it. Let's close up talking about all clear. If you want to be healthy going forward as the economy prepares to open up, what are the rules about someone who's recovering from COVID-19? And how do they end? How do they terminate that isolation at home? Well, here's the rules from the CDC. First, no fever. You have to be without fever for 3 days without taking any anti-fever medication. A marked improvement in your symptoms, your coughing, your sneezing, your congestion, your body aches. Improved symptoms, no fever for 3 days, and it's been at least 7 days since your symptoms started. So today's April 28th. If your symptoms started on or before April 21st, no fever, and your symptoms are much better, you are all clear. You need to wear a mask. You need to practice social distancing. You need to wash your hands like everybody else. But other than that, you're ready to rejoin society. And in 28 days, you might think about donating blood. There's still time to get your flu shot if you want to be healthy for the rest of the year. CDC says upwards of 61,000 will die from the flu this year, and we have a vaccine for that. What's keeping you? Get your family in there and get them their flu shot if they haven't had it yet. And one final thought. Have you been sick over the past 5 weeks? Have you tried telemedicine yet? Telemedicine works. So I have a couple of tips I want to just run by you very quickly so that you can be healthy as the economy opens up, so that when you need to see the doctor and for whatever reason you can't get in there or they're not open yet, rely on telemedicine. It works. First thing is, of course, like everything, check with your insurer. Will you be reimbursed for that visit or do you have to pay out of pocket? If it's COVID-19 related, for now, most insurers are going to cover everything. Right? But if it's a little wart on your arm, that may not be the case. And don't think for a second that telemedicine visits are going to be any cheaper than a visit to the doctor's office. Just saying. Right? Next, don't let the technology derail your visit. Okay, so whatever health system you're using, they're going to direct you to their online platform. Get there early, try it out. Make sure you got a camera and a microphone that works. If you don't know how to do it on their system, well, go to Skype or some other webcam system just so you can practice and make sure you have a nice picture, right? Plan for your appointment like any other appointment. Bring a list with the questions. The doctor's going to have a limited amount of time, and it's important that you have all your questions answered. Also, be sure to have your medication list handy. And so in case the doctor, perhaps it's a brand new doctor you've never spoken to before, starts asking questions about your medications, you have the information right there and you don't have to think about it. It's already there on the paper. Set the scene for a doctor's visit. Dress appropriately, use good lighting, right? And make yourself visible to the doctor so the doctor can see whatever physical clues or imbalances or irregularities that might direct her to a more accurate diagnosis. Try to take notes during that visit, or invite somebody else to come in the room with you so they can take notes, and you'll have a second brain to remember the facts regarding that visit. Remember, medications may be prescribed, and unlike all these fact sheets they give you right now in a doctor's visit in a clinic, you're not going to see those. So you might want to take down a few notes as to when to take the medication, with food or without food, etc. And then finally, offer whoever is running this webinar feedback. All right, get back to the doctor's office, the hospital, the insurance company. They're going to ask you to rate it. The only way telemedicine is going to get better is if they have answers and responses from patients, from consumers who were forced to use it, and find out what level of satisfaction. Face it, you just need a drug refill. Why would you drive downtown and find parking, wait for an hour and a half for a dirty look by your doctor? You can stay at home in your pajamas and do it in 15 minutes, and you don't even have to start the car. It's really a good deal. I've enjoyed this visit, and in the future, I look forward to coming out to Northern California and share with you in person lots of interesting topics regarding Transamerica's Wealth and Health Initiative. Elliot, thank you for inviting me today, and if there are any questions, I'd be happy to answer them.
Yeah, we have a few questions for you. Thank you. Well, I'm going to put you on with somebody in a moment, but I got a question for you that's texted me, and that is a little bit political as well. So it seems countries such as South Korea, even Germany, were ahead of us on the testing. What test kits did they have that we didn't have?
South Korea did have a rapid testing kit. It wasn't perfect, but they had it, and they had over 300,000 of them within a matter of days. So they were aware, and they mobilized, and they had a governmental structure that supported it. The big reason is, a lot of people don't know this, in 2003, South Korea took a major hit in the SARS pandemic. And that authoritarian, it's a democracy, but it's a firm democracy, established a pandemic planning committee that remains in effect today in South Korea. And they ramped up, and they were ready for MERS in 2013. They were ready for Zika. They were ready for H1N1. And when COVID-19 came around, they were ready as well. So they had their first confirmed case the same day we had our first confirmed case. And the folks at the CDC were fully aware of the threat, and they were working feverishly to develop their diagnostic kits. They've learned some valuable lessons, and the biggest one has to deal with decentralization. They wanted to have absolute control over the testing for scientific purposes. But in so doing, because they were only cooking one pot of soup, the minute they put too much salt in it, they ruined the soup and they had to start over again. Whereas if they had permitted the development of testing out to 10, 20 institutions, some academic, some commercial, then they would have come to a winning test much sooner and then ready for mass production. I think they've heard plenty about it already, and I think there are going to be some valuable lessons from this.
And if another question, if I had it or I think I've had it, can I go to Stanford and get tested and offer my antibodies?
You can get the rapid testing recovery test right there in Northern California. You just ask your doctor and they can direct it. There are doctors' clinics now. I'm here in North Texas, and it's a $45 out-of-pocket charge. And it's just a small vial. They take one drop of blood, and put it in a vial of fluid that already has virus particles in it, so that if your blood has the antibodies in it, when they shake the vial, it'll change color, like a pregnancy test.
Okay. And then I got another question here. How can I be safe at a gym when the gyms open up if the treadmill there's a treadmill on both sides of me?
Well, that's an excellent point. And come this Friday, the gyms are going to be open here in North Texas, and they insist on social distancing. So there may be a treadmill next to you, but there shouldn't be somebody running on it. And it's up to the individual organizations to enforce that. So if you go into the gym and you find every treadmill is taken and running, then I'd come back a different time, or just go outside and run.
Let me see if I get a live question for you. Here it is. With the economy opening back up and gyms reopening as well, if they go to low capacity, why even bother going to a gym anymore? And then if the pathways are filled and I'm running 2-3 feet be next to people, isn't that just as unsafe?
Well, this is the challenge that the governors are having in deciding how fast and how much to open up. Armed with the information that we're getting close to half the population's already had this virus. They're not at risk anymore, all right? We use what's called the reproduction number, the R0 or the R0. And when this pandemic began, that number was 2.2, meaning somebody who was sick and COVID positive would give the disease to 2 or 2.2 other people. But now it's less than 1. It's about 0.7 nationally. It's less than 1 even in New York. Any first-year medical student will tell you when the reproduction number is less than 1, the epidemic is sizzling out because the virus can't find any new people to infect. So all people have to do is gently practice social distancing, keep the same lessons in mind as they re-enter society, whether it's the supermarket or the gym, right? I wouldn't go to any movie theaters for the next 30 days or so. That's just me saying that, right? If I'm gonna have to fly, I'll probably wear a mask while I'm riding in the plane to protect other people. And hopefully within 60 to 90 days, then most of this will all be over. And instead of bad memories, we'll have fresh lessons we'll need to learn to protect us all from the second wave so that it doesn't happen.
Okay. And you know, here in California, hair barbers, hairdressers, they're closed. I'm assuming they're closed in Texas, and you've got a nice crisp haircut. Who's doing that?
Mrs. Lloyd does it. She sets the setting to 0 on my Wall 400 handheld battery operated lithium charged buzzer. But to be accurate here, in North Texas, the barbershops are open and so are the tattoo parlors. Remember, essential services first.
Okay, how about golf courses?
Yes, they are. We happen to
closed.
live on the 13th hole of the Stonebriar Golf Course here in Frisco, Texas. And when things turned sour about 3 weeks ago and Texas went into complete lockdown, they closed the golf course. Well, some of these golfers, though, I mean, they're dropping 40, 50,000 a year membership. So what the club said was you can't use a cart. If you really want to play golf, you can play by yourself. You got to carry your own bag. There's no caddies. And if anybody goes with you, they have to practice social distancing and stay 6 feet away. Now, just this past week, the governor lifted those bans, and now the golf course is back full steam, and people are riding carts and staying at least 1 club length away from each other.
Okay, I want to thank all 3 of you very much. That was terrific, Bill, Dr. Bill. I really appreciate that. And Joe and Campbell, thank you. We're going to do this again next week. The first speaker from James Alpha, they are a premier real estate company. We think that there's a large vacancy coming in commercial real estate, restaurants going out of business, small stores going out of business. It's going to have a very negative impact on rents, which is may have a negative impact on office buildings like ours, which is now almost 20%, 25% empty. So we think rents are coming down. That means the value of buildings may come down. That means a change in the real estate market is ahead of us for the next 12 to 18 months. And they're going to be talking about what's happening in commercial, which may spread over to real estate. And will Northern California look like other parts of this country where real estate stopped growing in price? And then our second speaker is going to talk about if you're coming up to the years over the age of 60 and you're thinking about how do I take Social Security to 69 different ways of taking Social Security out with my spouse, with my spouse's age, my spouse, widow, widower, so forth. They're going to talk about the best ways to do that. And on behalf of your team at Prosperity Financial Group, we thank you very much for being part of today. Our website is www.prosperityfgfrankgeorge.com. And if it's money, it's personal. And we'll see you again a week from today. Thank you, Dr. Bill. Thank you, Campbell. And thank you, Joe.
Stay well.